witness is Mr. John Moloney. He's President and CEO of Moloney Securities, located in Manchester, Missouri. Mr. Moloney began his career in the brokerage over 30 years ago. In the mid-1990s, Mr. Moloney formed Moloney Securities. He is the chairman of SIFMA's Small Firms Committee and serves on FINRA's advisory board for small brokerage. Thank you and welcome.
Thank you. Good afternoon, Chairwoman Velasquez. And Ranking Member Graves is not here, but the rest of the committee. Thank you for the opportunity to testify before you on behalf of SIFMA on how changes to the financial regulatory system could affect small broker-dealers. SIFMA and its small member firms applaud your efforts to be the advocate on behalf of small businesses. Small businesses are the backbone of the U.S. economy, and small broker-dealers are instrumental in serving individual investors and entrepreneurs on Main Street. I'll forego the statistics for the industry and my company. They're in the written testimony. The only thing I want to add is the last line I have here is that my firm, like the overwhelming majority of broker-dealers, was not a TARP recipient. The majority of financial service reform proposals before Congress do not impact smaller firms like mine. However, small firms are concerned that changes contemplated for large global financial service firms could cause disparate effects on small firm operations. Because the investor confidence in these markets is important to all firms, regardless of size, a sound regulatory regime must contain several key elements. It must minimize systemic risk, promote safety and soundness of the regulated entities, promote fair dealing and investor protection, be consistent from country to country where applicable, and be as effective and efficient as possible. Well-crafted and thoughtful legislation is needed to avoid unintended consequences that the firms that I am representing did not cause. Congress should also include sunset provisions in the new laws and regulations so that they may achieve their desired effect and don't promote any undesired consequences. I would like to address two specific features of financial service reform that do affect my firm and my brokers. First, SIFMA has long advocated the modernization and harmonization of disparate regulatory regimes for brokers, dealers, investment advisors, and other financial intermediaries. We welcome Treasury's proposed legislation, which appears to acknowledge these important distinctions and which would give the SEC the authority to establish rules for a new uniform federal fiduciary standard that supersedes and improves on existing standards and is applied only in the context of providing personalized investment advice to individual investors. Second, pre-dispute arbitration clauses are vital to the securities arbitration system. Small investors benefit in particular as arbitration allows them to pursue claims they could not afford to litigate and do it on a much more timely basis. Treasury has proposed giving the SEC the authority to prohibit pre-dispute arbitration clauses in broker-dealer and investment advisory account agreements with retail clients if it studies these clauses and concludes that there is any harm to investors. SIFMA supports that provision. There are several issues that impact regulation of smaller firms that I would like to address. While each one may be insignificant, taken as a whole, the cumulative effect can be quite devastating. For example, fees for financial audits of small firms will increase due to the SEC's decision not to extend an exemption for small firms from Sarbanes-Oxley audit requirements. FINRA has proposed to eliminate anti-money laundering third-party exemption for small firms. This will increase AML audit costs. SIPC, FINRA, and the MSRB have proposed or implemented increased assessments to firms already. The cumulative impact of these and other changes drain limited resources from small firms and from their efforts in paying for their compliance training and customer service functions. Finally, SIFMA supports a small business community initiative to correct deficiencies in Reg X, to eliminate outdated regulations, ensure agencies do not ignore requirements of Reg X, and compel agencies to consider economic impacts on the rules of small business. Thank you, Madam Chairwoman, and the rest of the committee for allowing me to present SIFMA's views. We hope to continue the dialogue on the financial service regulatory reform and stand ready to assist any way we can.